Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube? Thank you, Dan. Well, good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all invited to the Trader Lab. Trader Lab's a community of like-minded traders who've come together to leverage their collective experience. This stream and the Trader Lab are about the business of trading. And the thing about Trader Lab is to understand that it's a professional community. It is not like potentially other streams or chats you've participated in. This is a very focused community on the business. And the way this might work, or to give you a sense of how it works, this is based on integrating order flow tools. And as you probably know, Bookmap is a high-tier order flow tool, and it is integrated with structured trades that are overlaid on the volume profile. The volume profile, as you might know, is based on auction market theory. And if we throw all the jargon away and we just look at what it is, trading is really shopping. And when you go to the store, the time frame, if you want to call it that, is really pretty fixed. Prices don't change much. If something goes on sale, they leave it on sale maybe for a while, then eventually it goes back to retail. If a price gets too high, you won't pay it, or you'll shop for an alternative product. So let's just say price too high, shuts off the buying, price too low, creates demand, and then the prices go back to a neutral area where both sides agree, and that's called retail. So if you think of this like shopping, what the profile does, and auction market theory, the concept of a shopping experience, is we are changing the time frame that we're shopping in. So the market is a discovery process of pricing. So all rotations in and of themselves are auctions. Now, obviously, there's other dynamics involved in this, but the Trader Lab, what it's about is helping traders understand the business and building structured trades on top of this chassis of auction mechanics. And when you build a structured trade, the idea is to extract the statistical probability of one thing happening over the other. And it's really gaming theory. So if you understand how casinos operate, they only play games with an edge. They certainly do pay the gamblers. We also take stops. There isn't a trader who doesn't take a stop. It's about account preservation. It's not about being right or wrong or predicting the future. It's about statistical probabilities and extracting edge, and only interacting or taking risk when you have a statistical probability that favors you. Now, is that logical? Think about it. And if that's not the way you approach the business, then you might be approaching it like most developing retail traders do. And that is looking for certainty, confirmation, predictability. And if you're in a random environment, those elements do not exist. If you're operating in randomness, in my opinion, you need to solve for randomness. And that's why the Trader Lab is here for you, and there's no cost for the Trader Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. We got a bit of things to talk about. We had a substantial trend day yesterday. I want to cover a couple elements for you guys. First of all, right now, exclusively in the Bookmap Discord server, our coaches are doing pro trader webinars. The Bookmap Academy is here for all of you. And what it is individual coaching by traders, shall we say, been around, know their stuff, and it can maybe help you get different perspectives, but it is to help you improve. Bookmap has invested substantially to educate the trader community by bringing top-tier educators, streamers, and other support methodology. In fact, here's the next piece for you that you might not be aware of. Bruce's pilot program. And this is about building edge. So if you're looking to build an edge and you do have to register for this, come to the Bookmap server, and then this will help you. And how do you build an edge? How do you define an edge? So this is how to start creating measurement. So these are all these tools are available to everyone, and there's more. You're going to go, really? There's more? Yeah, there's more. Let me give you a little bit more, and then we'll get into trading. Thanks for your patience. In case you missed out, now yesterday we were talking about a praying mantis as a pet. I don't know, but I don't know about your goldfish, but basically a shot of your trading companion. And there's nothing like having, in fact, I know about the cats walking on the keyboard. I actually know a trader had a 20 lot thrown on, and these were the big S&Ps, so that wasn't so good. But the cat, well, I would say the cat then didn't get to walk on the keyboard that often. Just submit a photo of your pet, trading companion, do hashtag Bookmap Pets, X, LinkedIn, or Instagram, and you can win a free month of Global Plus. As they say, not too shabby. So if you haven't done it, this is running through the end of the month. You're running out of time. Now, this is yesterday's trend day. And basically, now what was interesting about this was we opened and basically just went straight up. And when you get that kind of move, that shows aggression. So off we went, and you'll notice yesterday we just flew. Now, here's something interesting, and the thing about trading, of course, it is interesting, isn't it? This yesterday's high, if you look at this, is a weak high. So we anticipate, and there's the word I'm going to use, not predict, anticipate that this will get taken out at some point. It's weak. The other piece is right here on yesterday. This is the naked volume point of control. Now, when I say naked, don't blush. It means it hasn't been tested. So in today's RTH, which is what this is, this becomes a potential target. We opened lower, so that's a target. And then with the weak high, I would say it would be reasonable to consider the possibility that this will get tested, the all-time high. Well, this is trading, right? And that's, as they say, that's the way the financial cookie crumbles. Didn't happen. But let's look at the structure of yesterday. These black lines are called singles. Now, a single is based on market profile. Market profile are, before we had volume, which is this gray areas, we only had time. And time was a proxy for volume. Since we didn't actually have volume, the idea was the more time that the market spent in an area, that would equate to more volume. So that's logical, isn't it? So, but in that process, if in 30-minute brackets, and they're called TPOs in case but it's basically just think of it as a 30-minute bar, 30-minute time. Since it was time-based, if the market ran quickly and did not return to a 30-minute period, like fill it and test it, it left an opening called a single. And the understanding of that was that urgency. Why wouldn't the market come back? Well, there is demand. So that creates a single or a low volume area. Now, the nature of the market is to test weak highs. So this is still on the hit parade. Maybe not today, maybe never. That part we don't know. Not our job. What we do know is, let's look at what we know. This is a poorly auctioned level. Now, what makes a poorly auctioned level? This is what an auction looks like. Remember your store. Oh, it's on sale. I'm not paying that. And then the high volume is where the fair price is in here. And if it becomes unfair, we leave it. And here we left quickly. And then we started a new distribution up here. This is what it's called, the distribution of volume. So these singles suggest this is not auctioned. And what else do we know? We know is buy, 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 buy. Well, what about us, the day traders and the weak retail traders? Where are the big buyers today? I think they all went on vacation. I think, or they're sleeping in late. So who's in the market? Longs. And the market, and this is something you just might want to think about. The market goes up to go down, and the market goes down to go up. The market goes up to go, well, to do anything. But what happens if we don't get buyers in here? Then we can just kind of leak out the weak longs. And that's what this is. So the idea of this trade now is it's rotational. But what are we seeing with poor structure? If we can leak out the longs that are all in here and get into them. And that's what's starting to happen today. Now, is everybody with me so far? Is this making some sense? How we doing in YouTube? Are you guys with me? I'm sorry, Mark, you're asking me support resistance areas can be a buy or sell. If an all-time high is resistant, method says sell, but under the break retest theory, you should buy. Well, eventually we're going to get long, but at the moment it's shorts. So the idea of day trading is to think in multiple time frames. So yeah, this is a weak high. But that doesn't mean get long. Right now, what we have is weak longs getting taken out. So it sets up the shorts as day traders. The idea of getting short is to get long. So let's think about how the market works. The market goes up to go down. The market goes down to go up. That kind of thing, you see? And when yesterday, it was open and we'll see you later, to go up. The market goes up to go down. And then we don't know down to where, though, So that's part of the thrill. So right now, 34. So what we're looking at now is filling this in. So 38. And then the next area where we had an auction, which is this, and then we left it. This high volume is around 33 in this area. So we're looking at it, and these are not trade recommendations, maybe just to come down here or maybe get here, but this area. And it doesn't mean it'll ever do it. That's not the point. So that's and the only reason it's a short is because it's not a long. It could start out as a long. Open here would not be unreasonable to check this and take out yesterday's high and then get profit taking. Well, we just didn't get it. That's part of the mystique of randomness. By the way, the market is random. And now I understand for us, we're all looking for certainty. I get it. So what do we have? ETH high. This is that naked volume, the blushing naked volume point of control, which was yesterday's retail price right there. The ETH volume point of control is here. So this is the fair price from the ETH. This is the fair price from yesterday. So we're in balance. What that says is basically this is a fair area. So ETH high was too high. The all-time high is here. We didn't get to it. Now let's look where the ETH low is. The ETH low is right at the top of the singles at 43. So that was like our outside edge. Let me see if I can get this back here. Just want to show you. So the ETH low is right there. So you had your ETH high, you had your naked volume point of control, your ETH high. We didn't take out the all-time high, and we had ETH low over here, so it was boxed in. The outside edge is here of yesterday's high volume or fair area, the last distribution, and if you get under there, then you can go here, which is 38, and down in here. somewhere. And the somewhere is part of that thrill because we don't know where somewhere is. So let's take a look. So really, the ETH was very compressed. If you look at the range, it's 54, it's like a 10-point range. That's a bit compressed. So when you have compression, tight range, the market can break out and release that energy. So we have a range from yesterday's RTH, the upper distribution, and then we're inside of it in the ETH. Think of that like compression or energy. So it's two-sided trade. So the energy, now we know, and what else do we know? Here's the other part. What do we know? We know we had a trend day yesterday. We know we're in a bull market, higher time frame up. We know we have a weak high, and we know we have weak longs. Well, how do you trade this? Well, you can trade it from either side. But in day trading, you need to also always be thinking about if we don't get our higher time frame participants, and that's really what moves the market. Then if it's just us, then what might happen? Well, then the market may rotate into, if it's us, where are the sell stops? Sell stops are under the market. The buy stops, other than us today or anybody who got short at the high, which, then it's just weak longs. Now we can get shorts in here. If these shorts from today, and I don't know where we're going today, it's not the point, they can become the buyers. The market, write this down if you haven't thought about this. The market goes up to go down, and the market goes down to go up. Those rotations in all time frames are really market mechanics. The market rotates on rotations because if the market goes down, there's buy stops. If the market goes up, there's sell stops. So why are we going down today? Because there's potentially sell stops from yesterday. And we'll get shorts in here today. Now, what happens then? If we don't keep going down, those sellers become buyers, you see. So it's always two-sided. So we always have to be thinking about the possibilities. Now, when the condition of the market changes, yesterday was a trend day, there was no reason to be thinking shorts. In fact, I did have one short early in the session in which I narrated yesterday, and because it was opening in range, in value, we were looking at two-sided or what's called open auction yesterday to take out the opening swing low. That's kind of what happens in those, and that was part of the plan. It failed to do it. That trade didn't work. Then it was turn the barge around and just go north. That's just the way it is. That's trading. So everybody takes stops. Everybody does their thing, and casinos pay the gamblers, so it's okay. They deserve to get paid, but they don't have an edge. So over time, and a random distribution of outcomes, the casinos extract the dollars from the gamblers. So let's look here. So we're in a higher time frame uptrend. We have this is a high probability target, and then we have potentially the ETH high, yesterday's high. Okay, so that's where we're trying to go here. So the first trade, and this is very, very tight. I'm going to say it's really a difficult kind of trade. Here, let me show you. So for me, coming in initially, statistically, I was looking to take out that poor high from yesterday. So I was looking at the long side early. I'll show you. So high probabilities are if I get outside and I haven't hit the naked volume point of control, which is there, this has about a 68%-ish probability of getting taken. And then the ETH high, there's over a 90% probability to take ETH high or low. So since the trend is up, I'm going for the longs first. So let's take a look. This is called VPOC migration. It's something I came across, and it's just a way for me to narrate the behavior. The yellow line is high volume. High volume, remember, in your store, which is why I always start talking about shopping, really, is retail. But the difference here is the price changes in real time as opposed to your store, which the prices don't change much. So the yellow line is measuring the volume. Now it starts at 0 at RTH open. So what I see here is there's more volume here than there. So that is too high. If I break above this, then maybe this is too low. That's how I look at this. Now the opening swing low is here. So down, up. So this is what I was trying to do yesterday. So this is my opening swing high because I got the opposing force. And now this is where the buyers were. What's going to be under here? Stops. So for me to rush into this, not good. So I don't rush into anything. I want it to come under here so I can see, is it only the weak buyers getting taken out and are they absorbed? And I notice the icebergs here, but I'm below this and I'm below this. So what do I know? Too high, too low, except swing low, going to the moon, come back here, support, looking for the pick. I call it a stop pick. VPOC migration. More volume here. Very subtle. And this is not tradable for most developing traders. It's an area to develop because the opening trades are unique to themselves. They're not like other events that'll happen or structured trades in TraderLab because we have no structure. It's developing. So in the early going, and we're only in here, 40 seconds? You see what I mean? There's really nothing to do here. You're just going, what's going on? So what do I know? I got my stop pick. This now is resistance. Look at the resistance. It's there, there. So resistance, there. Absorption is here. No clue. Break high. Now, what has happened? Resistance, resistance. Here, I'm going to throw this in here. I'm going to look at, since it's a slow day, I'm going to do some work with you guys on microstructure. And again, not mechanical, informational. So let's look here. So that's my resistance. This becomes support. Now, support doesn't mean the market doesn't go below it because of the opening swing. Remember that. Resistance, resistance. So here, resistance. See the resistance? Break high. Change. Now, where's my support? What was resistance? Here. Resistance. Now I break high. Now what? So I have resistance. I have support. 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 See? Break high. What am I seeing now? My buyers were here, and I'm now above my buyers, and the pricing is changing, and I now have my support. Break high. Support. These are all longs. Now, again, specific to the opening, this is not mechanical. And I know, and by the way, where are we trying to go? Here. So if you got long here, you got to use a shoehorn here. And then we have settlement, and we have the ETH high. VPOC migration. This suggests too low. Let me mark this. Going to short. Now, eventually we're going to get to the short side, okay? But I wanted to spend some time. It's a very slow market today, so I've seen paint dry faster. So in a day like today, if you don't have a disciplined, vetted plan, you're going to overtrade, and you can take a day like today, which has a few opportunities. By the way, here's the next target, okay? And that was over a 97% probability would take out the ETH high or low, okay? And since the trend is up, for me, going north. So now everything is on the long side at this point. So I'm just following, the yellow brick road. The next target is this, because there's a poor high there. I think somebody in TraderLab, Hermit, I think it was asking me about that. Now, this is a buy sweep. Now, this is a bit disturbing. Buy sweeps often suggests counter rotation. But I'm running a high probability statistic. And this statistic is still in play. Let me give you this probability, and you tell me if it was reasonable or not to shoot for this target, the previous high. We have a core structure from yesterday's high, trend day, and there's an 87% probability we take out either yesterday's high or low. Any reason to think it's going to be yesterday's low at this moment or any moment? So this is where we're going. So the next target was to come through here. And there's my sweep, and there's like, what's going on? Because that's exactly what was going on in my brain. It's like, what's this? And here's my support. See the bounce? Now, the VWAP, I have to clear and come all the way back up here. So it's break, and right here, you know, the teeth are chattering, and I'm thinking, now this is assuming you don't have a trade management process. So I'm only showing you behavior and trade locations, not trade management. If we talk about trade management, this is a big deal. And then, but it really depends on you, not me, on you, because everybody trades their own rotations. There are some traders in TraderLab who might just get long from here and go to the ETH high. There's other traders in TraderLab that are going to look at this and they're going to fade this to come back here. That everybody's different. So I have no opinion on what other traders do. Now this is trouble. When we come out the low, then something is, as they say, potentially amiss. So let's take a look. Where's resistance? Let's look. So let's come back here. So this is our sweep. Okay, but let's look at the triggering structure of a sweep. So here's the sweep, and nobody knows until we break and test. And let me show you the structure. Now, these are clear in hindsight. When they're developing, they're not going to be clear. But you need to learn to read the behavior. If you look here, you see this is the shopping experience. Outside edges here. The buyers are here. There's the sweep, and there's sellers here. Now, nobody knows until hindsight, right? Break low. I'm now under my buyers, and these guys are absorbed. There's the iceberg. And now I get my buyers above the sellers, and I know my sellers are here. Now, I don't know. Let me show you the high volume here. Now, this is the same process I'm showing you, but it's a higher time frame. I'm sorry, microstructure. So in the higher developing daily time frame, this is the retail price, the volume point of control. It's right there. So this yellow line is where most volume is so far for the developing day. You'll notice it's kind of balanced. In other words, it's so, but up here at the time, let's come back to where we were at the time. So we don't know, right? Going to the moon. We know nothing. See? So this isn't here. We're just going up. I have the same structure here. You see how the market behaves? So now I'm coming up, going for this. I get the sweep, break, test. Now watch. This right here. So right here, I have a triggering structure. Break low. So right here, it's a suspect. Here, it is a, let's call it a bona fide trigger, and your resistance is here. Alan M. Alan, you're listening in the lab. This, you would not be able to enter here. This is the test. This is a micro reversion. This is so the trigger starts here. This is not the entry. This is the break that, for me, suggests this is a valid trigger because the range here is greater than the range there. And this is the test of the outside edge, which is there. The way, and this is just for development purposes, the short would be 1 tick below here, stop 3 ticks above there. Everybody, you have to vet this. This is just like for openers, as they say. Break low. Support is here. Remember where we lifted off from? Too low. Retail price. If I come down here, I anticipate if these buyers will activate here. If I take this short, my objective is to scale here. My next obstacle is here. And then potentially out the bottom, wherever it goes, it goes. Where's my resistance, Alan? There. See? So if you sold this, your stop's 3 ticks here, you would not get taken out, or the trade is over down here when it comes back inside. Is everybody tracking? Thanks, Louie, with the 1 lot. Haven't seen you for a while. Why is it a weak high, Leslie? Because it's like a double top up there. Double TPO. Exhaustive. No, it's not a single on the top. It's just exhaustive. There's no excess at the top. So this is a short, and this is if you're staying in, which you might not, because you may still be thinking about this, then it's trade management. Right here, as an example, because we came out again under the low, broke high, resistance. Where's support? It's here. So a quote day trader, subject to the plan, could be selling this. And then once you come back here and you can't get under here, you could be out of the trade. You could be getting long here and you could be getting out there. Or you could be selling this to come back here. We are in what's called two-sided trade. This is there. And that's your micro high volume. This is mean reversion. This will make you a little crazy. This in here is think of this. I talk about shopping. This is, and I don't mean to insult anybody, but why make trading complicated? Trading is simple. We make it complicated to try to create certainty. That actually obscures what's right in front of you. So all of you guys that think it's just throw a lot of spaghetti against the wall and see if it sticks, that, at least from my experience, it's not the answer. It's actually the problem. This is simple. This is your convenience store down the street. This whole thing for the day is your supermarket. It is the whole thing. The same process is happening right in here, but in a much shorter time frame. Think Matryoshka dolls, Russian dolls, vertical integration. This is too high. This is the retail price in this store. This is too high. I'm not paying that. Here it's on sale. I had my buyers. But if the retail price becomes too high, I'll leave it. And now I test here. Too high. I'm out of here. Now the same process is happening down here. Is this too high? Supermarket price. But is this too low? Outside edge. Previous price in the supermarket. And they had raised it. Now I come back to what was too high. It's still too high. You see? Can you guys kind of see the auction? So this is the auction. Okay? So we come up, we take stops, and we don't get here. Kind of mind-boggling, VPOC migration, once you break under here and you test, there's trouble. And the trouble is that the volume point of control moved higher. Hold on. And instead of bouncing to the upside, which is kind of what we'd be looking for, in other words, it's price is moving higher. This now is too low right here. So what happens is too high, too low, shift higher, which suggests back here, take the stops out over here, absorption, break low. This is now support. Looking for this, break low, trouble, test. Is it now too high? I'm going to put a little line over here. We'll see what it does. I certainly don't remember any of this. back here. So you can kind of see some structure. Right now, this is two-sided trade. This is not a, this is a tough day because you can become a whirling dervish on a day like today. So what we're finding out here is we've identified where too high is, and the fact that we come out here doesn't change what's too high. This is still too high. Stops. So if you were keeping your stop here and you didn't have any trade management, you get taken out. You got taken out, then you still know this is where your high volume is. All this was a stop. I call them a stop pick. The high volume is here. So it's still a short. This stop pick. That's life. That's called trading, and that's the way it works. Now let's look a little further. Once we can't get over that, and we break under here, this here, it sets up a couple possibilities. Now, the thing you've got to be conscious of is the ETH low and this single that I showed you at the top of the stream. If we come down in here, we can roll down even to the 20s, possibly. And it's not a recommendation. Now, we were talking about, now we have two trades in TraderLab. One is called the IB failure, or IBF. And what it does is, the idea of the IBF, now the trouble, of course, with this trade is, are we going to get under this? Because there's going to be stops under the ETH low. So, but if we come across here, there is a structured trade, and it's mean reversion. Now, the thing about it is, if the trend for the day is going to shift to down, long liquidation, weak traders getting taken out, then where might they sell it? Well, we have the mid and the VWAP. So if somebody got long on this trade, they have to be scaling at the first obstacle. And then if it's going to work, it's going to come to the mean and then rotate up the food chain. So let's look at it. The long would be here. Stop would go under here. And then you're trying to come where, what's here? This. BHVN, mid, VWAP. So if you got long, you got to scale here. And then you're looking to come across. Or, let me give you the or you sell this for, and then you're looking to come down here. Break low. Now this sets up the IB continuation trade, or you're short from here. Either one. But this is where your risk is. So let's just look at this. This is very rotational. So from here on, there was no longs for me. This is okay for a long if you're trading the reversion, but you have to get through this. Or you're looking at it coming and you're only taking the shorts because you know you have this. That's subject to your trade plan. We were discussing this in TraderLab. This is the outside edge. It's down here. And let me bring you back to the behavior. I'm going to, down here is another single. Let me bring you back, hopefully. So now we're down in, where are we here? 33, down here. So we're getting into this. If we clear this, we have this, and we even have this. This area here, the 25, 26, kind of my target on this short, but it doesn't have to go any further. The 33 to 26 is the target. 33 in here to 26. So this is where this trade is trying to go. And it's filling in the low volume. Does that make sense? Willers, you're putting up levels. There is no value area from yesterday, so there is no value. That level is not qualified. There is no CHVN at 25, so I think you might want to review these levels and how you're extracting them. We are trading yesterday's structure. And you should be looking at the micro composite, not the composites. Micro composites are the intermediate time frame. We primarily are trading in those. So you're a bit out of it there as far as how you are building structure. Trend day, no value. What matters is the auction. It wasn't auctioned. So anyway, 33, and then this, and then, or wherever, that's not the point as far as targeting. So now we want to observe down here. We want to see if we get absorption in this area. We really don't have anything going here except this. So this is where we are. We're in this area. If I get under this, it sets up, I would say, this 25, 26 area. But the 33, we have to get through this. You see this little high volume? Think of it like the store. Too low, too high, and the high volume at 33 is retail. And the market left it. So this auction had a price, and then it was too low. The market tends to come back and check. For example, the naked VPOC from yesterday. Well, this is too high, and who knows about this thing? Why didn't we take out the all-time high in at least one ticket? I don't know. I'm going to send that question into the Market Mavens Society and let them tell me why, because it's random. So once I'm in here, once I'm under this poorly auctioned area, the market's job is to check. So this is the outside edge of yesterday's fair price, being with the highest volume there. If it's too high, I'm going to leave it. Now I'm going to start checking for what's too low. So 33, if I get under there and I get under here, then 25. So for me, 25 is my outside edge, but it could also get stuck right in here. So that's the short. That's it, sticking to it, and no clue. So what we want to do now is we want to observe the behavior right in this area. We want to see if we get absorption down here. So far, I'm not seeing anything worth mentioning. Are you guys tracking? Sometimes, when we're trading, there's not a lot of trades here today, as far as I can see. So here's let's watch. You had your sellers here, and you have this. So let's watch a couple locations here to observe. Okay, let's look at the structure. Liquidity here, break low, test it, break low, X is resistance, outside edge is here, and there's an outside edge there. So we can come into these areas. This is micro high volume. This is the outside edge. This is an outside edge. So what you've got is, this is an auction. Retail. Remember, this is an area of a target. So the trade could be done, or you're going to hold it and you have a trade management process. Nobody knows where it's going, so we can't be too concerned about what we can't know. Let's see what it does. Okay, I'm seeing the absorption now. So what we're seeing here is we had our sellers here, we came down, and now you'll see our buyers are here. So you got to see how it behaves here. So if from a trade management point of view, there's two ways. You could be using this. Here, let's just throw this together. This high volume. So this is an auction. Now I'm kind of just going into very short term, and the volume is there. So the outside edge is here. This is where the sellers were still in control. The volume in this structure is really actually about, it's around here. So I'm going to put another one over here, just kind of keep it. So this area is high volume. The outside edge is there. So this is its own auction. I'm not paying that. Low volume, outside edge, and then wherever. This is the low side of that low volume. It's around 34. Let's come back and just so you can see how these pieces might fit together. It was here, this 34, this outside edge. So this is where we were looking for it to come. And then 33, and then if I get under this 28, then, we can continue on. So it's trade management, and then whatever happens, happens. So now let's look at this. We have a buy structure right here, and I'll show it to you in the profile. I am seeing absorption. Whoops. This is our outside edge. And this is the last place. So this, if we get above here, then this trade would be done. You could have right here is a buy trigger. Right here, subject to how you manage your trades, right there. So what you're seeing here is a buy trigger. This is resistance, and this is your outside edge. We keep coming up, and we get up into here, then the trade could be over if you're going for more extended targets. Or, since we're in our 33 area, which is the high volume area, and that is potential support, you could be done with the trade in here. I can't tell you what the right thing to do for you. That's that part you have to figure out. There are some traders that are going to just trade this. Other traders are going to be holding for the yesterday's for down here. This may only be a short-term rotation. This is the thing about trading, is we don't know what is a counter rotation or a reversal. They all start out looking the same. So what I tend to do is I trade the targets. I don't worry about it. So this is the area. Okay, is everybody with me? No holy grail. Gave up looking for that. How are we doing in YouTube? Well, it's not mechanical. Buy at low volume nodes. It just doesn't work that way. Market can slice through low volume. In fact, what it typically does is, where are you buying at a low volume node? This is a trigger. So now the question becomes, do you buy this to come all the way back, or do you just cover your short and that's it? That's where trade play comes in. One of the ways I kind of look at this is I want to take the trade where I can trade into something. Here I'm trading into the longs and getting their stops. This could set up getting the stops out of these shorts. Remember, the market goes up to go down, goes down to go up. So we just have to see the behavior. But this trade could be done. Doesn't matter. It's really just about understanding how the market works and not predicting what it'll do. Remember, this 33 was this in here was this consolidation had high volume in it around 33. So you can see it sticking out. So when you're coming down, this is what we were looking for to come into this because it wasn't auctioned. And then here, and then if we got below it, then here. If you don't get below this, then we can come back, come all the way back up the food chain. And that could be a long for somebody or not. I couldn't tell you. So now we have the fuel to come back the other way. Yeah, Mark, I don't know the break retest theory that you're posting about there. I mean, triggers are triggers. This is your break. What's important about it is the location, not the fact, because you're going to get this all over the place. Like here, break, test, down, chop, 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 break, just break, no test. Now here, we're coming back above resistance, so the short would be over. It's not a recommendation. I'm just saying, unless you enter, like I said, the way I work is I just like here, it's on my chart, low volume zone, low. So this is where this is all on the chart before the day starts. And I have no idea. I don't think about what the market will do. I know what it might do. One of the things about having a trade plan, and we work on this in Trader Lab, is not predicting anything because you can't. Did anybody predict today that we would not take out yesterday's all-time high, at least by one tick? And if somebody did, come to Trader Lab, clue us in. So that's the randomness of all this. Now let's talk about what happens here. Suppose this is not the low of the day. Suppose we counter rotate and then we go down to the next level. Here. How am I supposed to feel about that? It's the term feel. I don't feel anything about it. I just trade the locations and levels that I understand. And then if the market continues doing its thing, and that's fine because I trade probabilities and auction structure, market mechanics. I don't worry, if you will, about catching the high and the low of anything because I've never done it successfully. So I don't, that's not what I do. I just look at structure, look at why the market behaves at certain levels. And then the nature of the market is to come back and check. That's why we rotate, and that's why the market goes up and then goes down, and now it's going down to go up. Now, where is the low? It's not that you can't take a long here, but at the moment, the market hasn't proven that we're done. And this might be the low of the day, We certainly will know in hindsight, but does it make sense for me? Now, it might make sense for me if I'm not trading with a target, and I do, but let's just say I don't. It might make sense to me to be out of this. Does it make sense for me to take a long here, though? See, that's the question. Well, I can't give you the answer because I don't have in my plan. I'm not trying to pick the low of the day. I'm just trying to align. Now, if this is the low of the day and I start coming back across all of this, then I know I have a good opportunity to squeeze these guys out and maybe even come back inside and take out yesterday's high. Maybe. But I don't have a long, so all I can do is cover. I can't get long here. It might be the low of the day, but it might be the low of the day. But where's my outside edge? Here's my low volume zone, and the market can tick into this. And if I can't get above this, then I'm going to come back to the high volume, which is right there. That's my support. So I know I have resistance in here. I have stops here. I have resistance up here. See these little nodes sticking out? That's resistance. And I don't, remember, there's no way to know what it's going to do. What I do know about the way the market works is retail traders pretty much do the same thing. They trail their stops, over swings. So I know if I put my stop here, I have a pretty good shot at getting taken out. I find that that's why I trade the targets. And if I get something like this, I'd be out of this if I was still holding it. I wouldn't even think about it. I just go, okay. Because now it could do either thing. Well, it could always do either, but where's my support? So what I have here now is I have resistance in here still. I got support in this area and down here where these little high volume nodes are there too. So support, and this is like resistance. So I'm in like no man's land or woman's land. So I have nothing to do. So I'm just saying this is the way I would operate in this. And I can't tell you what it's going to do. I never can. I know what it might do. This might be the low of the day and we go up, or this is just a counter rotation, pick some stops. There's my icebergs, and we continue down to the next target. But I don't take a trade now. I don't initiate. I just hang out and go, this is interesting. Because I'm not here to take, just to kind of respond to FOMO. I'm just here to take my trades and then move on. Hope it makes sense. Trading, at least for me, is catching this kind of rotation, I mean, the last trade, you could have been getting short up in here. We are in here. This is the IB continuation trade. You also had the VWAP, the test back, wherever that was. Can't remember. It was here. The IB. So this is either a long to there, or you see the long, you don't take it because of the stops and the low volume zone, and you use this to get short, or you don't do anything with it and you use this, the IB continuation trade, to get short, or actually this is it. So that's a short right there, and then you just be going, down wherever. Okay, so that's it. That's how many of these do you need? I don't know. It's 10-point trade, whatever, 8-point plus scale, 10 points. That works. Works for me anyway. So I trade this kind of stuff. And the reason I trade it is risk reward. I need the range to pay for the stops I take when when things don't work, and they don't. I always take stops. It's not a big deal, other than how you emotionally feel about it, but it's not a big deal. You got to take stops. Otherwise, you're not protecting your account. Nobody knows what's going to happen. So here's this thing. Are we going up from here, or are we going to make new lows? Does anybody know? Are we going to take this low out? Are we going here? Because that's the next target. And it doesn't have to. What are we going to do? Uh, B say, how many trades do I take? I just take the trades the market offers. I don't have any count on it. I wouldn't say it's a lot, only because if the market gives the opportunity, I just take the trades. If so, there's going to be days where there's 8, 10 trades, and there's other days there's 3. And the reason for that is I'm not looking for action. Um, the more trades any trader takes, the more risk they're putting on. That doesn't necessarily mean they're getting more opportunity. Um, because if you start trading like for this kind of thing, in the ES, just based on the rotations, to get in here with a 3-point stop or 2 and change, that's kind of a shoehorn. That's about the average risk I take on a trade, 2.5, 3 points, sometimes 4. Depends on volatility. So I'm not trading for 4 points. I'm trading for 10, 20, more. And so when I put a trade on, I'm looking at it more as a position, intraday position, and to go for what I perceive to be targets that have a probability. And the market mechanics is this 30 isn't important. And if I can get under there, this is my next target. So it'd be 25. I would not initiate a trade here because look at my range. So I don't have a trade. So I just sit back. This is my current support. I got buyers down in here. This could be the low of the day. I don't know. I'm not doing anything. I don't call trades, but the fact is I have no sense of urgency to trade. I'm actually at the opposite. I just am very patient. I've been doing this a long time, 46 years. So I've kind of gotten detached from the need to be, for action. In fact, I recognize the stimulus to do something. Like I gotta do something. Was that a trade? And I start. Of course, I did that many, many years ago because I didn't know. I just didn't know. I thought, day trading, rotations. Well, yes and no. This is not a rotation I trade because even though I might be able to get short here, where am I going? Ahead of there. Well, let me just see. What is this? I'm not trading for 3 points if I'm risking 3. You see? It doesn't make any sense. So I don't do it. That's just me. Other traders, if they want to do that and they have an edge, they should do it. That's the whole idea of having an edge. My edge is not in this. These are triggers, but they got to be at a location where I know I have the other traders to help my trade. Who was helping my trade, my shorts? The longs from yesterday. They're the sellers. Sell stops. I need them. Now, if I got long, which at the moment is, let's just say, is something that I'm observing. If that's the case, then who's going to be the buyers, the shorts? So I can trade this from either side, but I'm only going to trade it where I have a structured trade. I don't have a trade here, and picking the low of the day and all that, just not my thing. Now, I might have another trade coming up, but it won't be until further up. And if I do, it's a reversion trade. It would be to come back here and maybe come out the top. But that might not happen today. And it doesn't matter. So I can be done for the day. Doesn't mean I don't have other trades, but primarily this is the primary trade of the day for me. Other than the first day early longs. Does that make sense? Sellers at 24,930. Sellers at 6,735.5. No, I think then when you say learning mean reversion, should you be adding? Then you got to trade mean reversion, no adding. You need to have an edge with mean reversion before you ever think of adding anything. You got to understand how mean reversion works. And typically, often, mean reversion doesn't have a huge range to it. It's just a behavior that we can exploit when it shows up. Because typically, mean reversion would be something like outside back to here. That's a reversion. Well, the range, 5, 6 points, and then the idea would be to come to the other side. If this was a reversion trade, it's not. So we just tested the low. We took it out. We have a sweep. This is important. So we want to see what happens here. Sweep. We check the low. We still have absorption going on over here. We have to see what's going to happen. So this is why I don't pick the low of anything. I'm no good at it. I don't know who is. Hindsight's always 20/20 in trading. So support is this. So anyway, I know I've been talking about not having a long because I got this. That's my next target. And I'd be fine, by the way, so you know, coming down and covering this thing, no problem. Not even a blip on my radar. Because I don't know where the low of the day is going to be. So I'm not trying to hold the trade to the low of the day because I won't know where it is. I know where the market might go because I understand market mechanics. I don't know when, how, or if. I don't know if this is the low of the day. That all we did is take these guys out and grab that inventory. See the stops coming out and the icebergs are still absorbing. So I still have absorption. So we have to see. So Ben, just, mean reversion is the most common behavior. And I always suggest in Trader Lab that traders, put a stake in the ground and say, okay, I'm going to learn how to trade mean reversion. One trade. Now, let me be very specific. It's a condition. It's not one trade. It is one condition. The condition shows up multiple times during the day. So it doesn't mean only one trade. It means one condition. And when the condition shows up, you can anticipate it. You can mentally prepare yourself for it. You know where the area of a potential trigger might show up. You know the behavior. You know the range you need to qualify it. You know how to enter the trade. You know where to enter the trade if it shows up. And then you know how to manage the trade and how to get risk neutral. And also how to take a stop like the rest of us do. So that's what you would know. And you become expert at it because the things you need to know to be able to trade mean reversion are really what the market is always doing. It's always reverting to a mean. This is a mean. All it's doing is reverting to a mean. Now, if we have our stops under here, we get picked off. That's trading. You get picked off and you come back above here. Now, where's the stops? The sellers in here and in here have their stops there. And I always find, and this is just anecdotal, the better trade is after what I call the stop pick. So like this. These guys had their stops here. They just got thrown under the bus. Now that, and this is not a long, this suggests to me that if the inventory gets taken out, 407 sell stops, and now I have buyers, now the potential is to squeeze. It's not a recommendation, but let's just see what it does. Are you guys with me? Do you have questions? So as far as the number of trades I take a day, if the market has a lot of range and a lot of volatility, 20 trades, doesn't matter. I've done webinars that are out there on YouTube World. One was done a couple years ago. It was a 4.5-hour stream of real-time narration on an FOMC day. And I don't remember exactly what happened, if maybe they were raising interest rates or something. But it kind of shocked the market, and we had just huge days, 1,000 point, in the Dow, that kind of thing. And so that was whirling dervish trading. Huge number of trades, and I don't remember the number, but it was live narration. And that's I don't remember which one it is, but it's up there. But it's 4.5 hours. I used to do 3-4 hour live narrations in real time, which I don't really get to do much now. In fact, I don't get to do it because I get an hour and a half because we have to make room for other streamers and educators and give you guys a chance, to expand your horizons. So I do less, which is fine. You can always come to Trader Lab. There's a link in the bottom of YouTube, by the way, if you're visiting. The Trader Lab is a community of like-minded traders who come together to leverage their experience. It doesn't matter how long you've been trading or what you do. Not the point. The idea is that together we're better. Trader Lab is really about you. It's not about me. I'm just somebody who's been doing this a long time. And I've got a lot of experience in a lot of different areas, professionally and also out here with you. So I've gone through it, and what I fantasize trading to be is quite different from what it really is. And nobody tells us what it is. The grand illusion is that this is somehow a video game with an ATM attached to it, So it's not. So a lot of you guys have been gamers or play games, You bring that to this. This is not that business. That's not even a business. That's a game. This is a business. So we have to build it as a business and treat it like a business. If you're going to build a sustainable business, you're the CEO of the business. Would you hire you as your primary employee in your trading business? How would you manage that employee? What goals would you have agreements with that employee? How much practice? How much research? How much of the work side of this would they do before putting a trade on? Are they going to just gamble with your assets, or are you going to require them to show you statistical probabilities before any dollar is put in the market? Or are you just going to let them gamble? You see? And what would you do if that employee of yours did not keep their commitments to you and you own this business and you don't have unlimited capital or time? What would happen if that employee did not keep their commitments? You see? You need to think of wear two hats in this business. One is a business owner, assuming you aren't here just to play, a hobby, and you want to actually create a sustainable business. How would you deal with that trader? I can tell you, when I sat on the trade desk and I had other traders I was working with, I would ask them questions like, when you make a decision, what's behind it? What are you trying to fulfill? What need is that? What belief do you have? There's a psychological component to this that is really the biggest obstacle. I believe anyone who comes to Trader Lab can learn how to trade. But I will also say that no matter what you learn about the market, if you don't understand the psychology and the obstacles, you will always be solving to fulfill a psychological need. The need to be right. You're looking for certainty, confirmation. All that terminology is rooted in primal wiring. And that's really about avoiding risk and socialization, being right. Raise your hand. Get a little gold star in your forehead. Proving to yourself, stroking your ego. Has nothing to do with this. Absolutely nothing. But we bring those things here, and then we try to fit trading into those needs, those primal needs. You believe you can accomplish that with more indicators, more curve fitting, and the rest of it. We've all done it, okay? But that belief has nothing to do with the business. So what I found, and at least what happened to me, I was solving based on my beliefs that my objective was to squeeze the risk out and create more certainty. It was very logical. Isn't that what we want to do? More profit? Yeah, but you can't squeeze the risk out. You see, the way you have to accept the risk, it's very different. And what you need to do is accept your losses. And your losses are overhead and costs of production. What do losses have to do with squeezing the risk out? You can't squeeze the risk out. You have to take your losses. You have to really understand that this is a statistical business, a probabilistic business, not a be right business, not a confirmation business, not a avoid the risk business. You can't, and yet most of us are on this squeeze the risk, get certainty. I want confirmation. Let's do more indicators, more confirmation, more certainty, more risk avoidance, and you can't. And decisions to do that are based in primal needs, primal wiring, and a belief. So I'm going to suggest that the big, I think what do they say? The gorilla in the room is your psychology, not your ability to learn how to trade. But the choices you make are driven by your psychology, not your ability. So if you're not making the choices that are aligned with the business, then it's not about your ability. It's about your choices. You have choices. You might be making what most retail traders make is potentially the wrong choices. You're choosing certainty over randomness. You're not solving for randomness. There is no certainty. There is randomness. Randomness, the solution is edge. Then the solution is extracting edge, and you can do that in TraderLab, and operating in uncertainty. I know, does this sound like I'm going in a circle, or do you really see the difference? This still shows yeah, now this, remember what I was saying to you. This looks like a reversal. This is the pick. And I like the longs better after the pick. Now, if you took this long, you get stopped out and, don't take a cast iron frying pan out and beat yourself in the head. It's just the way the market works. There's the stops. Those are those guys. Now it's a better opportunity. Does that make sense? Can you guys understand why when this happens, it makes it better? Does that make some sense? So now we have to look at these outside edges. Remember the 33 or the 26, 25. We got our 33-ish, that high volume area. No precision. Remember, no precision. And in here, we had delta saturation in here. Saturation basically means that the sellers got absorbed. Here's your sweep. Here's your test. There's your stops. There's your buyers. You see the change? Here's your test. Here's your test. All these are longs. And that's not a recommendation. And then all you're trying to do with this is now you have to be looking out here. So this could be a long. So if you took this, you get stopped out, right? This changes it because of the pick. I didn't know what to call it. You know how we used to always say, oh, I got picked off. My stop got picked off. It's a stop pick. It is what it is. Nobody went after your stop. It was the buyers were not here yet, and we got additional sellers. That's all this is. Here, resistance, the sellers that were here and here, there's the icebergs. And in here, we tested, you got more sellers. Took this out, going to zero. But look at the change. There's the buyers. And now where's my support? It's on top of this here, which you wouldn't know. And then it's the next layer up, which would be on top of this. It's in here. And then you're doing what? Where's the shorts? All of this. So now there's your fuel. All of this. and then you're just going to manage it. This is an area, a low volume outside edge. What makes low volume areas? Swings. So this here, chop, 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 is an auction. Too high, too low, retail, which is that, and then you break below it. Break, low, test, creates this outside edge. There's your swing. So it's here. So stops are going to be over this. So if I can get up into here, I can squeeze these guys. So they're up around 42-ish. Stops are here, and where's our mid? There's going to be stops and potential sellers at the mid. So if I come up here, I have to be thinking about the mid and the VWAP and this outside edge, low volume node, because that separates this auction. This auction intraday has an outside edge up here, which is where the stops will be. So if I come up in here, if I can't get over this, I can do one of these. If I keep going up here and the shorts, remember the higher time frame is up, I can keep coming back. So you guys will get to see how it goes. Now, whether you take a long down here is up to you. The way I kind of look at this stuff is if I was just playing the shorts, I could be done. If I'm taking this trade, I would be long, and I'm trading and I'm using the sellers as my buyers. The same way we were using our buyers this morning as our sellers. Now I have shorts, and if this is the best they can do, then I can come back across the range and squeeze. Or not. You know, it's not predictive. It's like step by step. Out here, and then clear here. If I clear here, I go there, and it just is sequential. Does that make sense? How do I know if there's stops? Stop an iceberg detector. These are sell stops. The green ones are buy stops. That's how I know there's stops. Stops. So there's always stops on both sides of the rotations. So when the market is one directional, like yesterday, then you've got longs in the market from yesterday. And if we go back and look at yesterday's structure, this is where the longs are. All of this is buyers. Well, once I came under this area, which was this outside edge of this consolidation yesterday, then this down here is not auction. There's no back and forth. It just ran. Well, there's no structure here. The market's tendency is to come down. That 33 is this high volume right here. This is like a retail price in this. Same thing I'm showing you in those triggers. And if I fall under here, I got this 25, this. And if I don't get under here, then I can come back and fill this coming back the other way and return. And then come all the way back and even take out the high of the day. Not necessarily on my radar, but it's always possible. You guys, if you want to find out more about this, if you're interested in learning about Trader Lab, this method, trading does not have to be complicated. You know, it is always random. So we have to differentiate between complexity and randomness. Solve for randomness. Don't worry about the complexity. You know, everyone thinks that trading is complex. It is not. You just have to understand market mechanics. How does the market work? Why does it do what it does? The other part of it is, and I've shared 60 PDFs of structured trades that you can reverse engineer. And I always say, pick one. And the most common behavior is mean reversion. Even this, coming out here, if I don't get above here, can rotate back. That's mean reversion. You can trade any of these structures as long as they fit your plan. This is my outside edge. My stops are here. Now, here's what can happen. This is the low of the day, and off we go. But I'm going to rotate. It's not the low of the day. Then all this was a counter rotation. There's a buy sweep. That suggests the rotation. Now, this I don't trade. I just don't bother with this. If I took a long, I can tell you, if I took this long in here, my first job is to get risk neutral, which buys my stop if I take this out. And if I don't have enough range to get risk neutral, then I don't have a trade. It's just not important. Is that a little too detached for you? Going as doesn't matter. If I don't take another trade for the day, it does not matter. And the reason for me would be that if I get long, this is where I'm trying to come. It's out here. And I've got a scale. I know that this is where we fell out of this. So I know this is too high. So, and you see what's going on? That's why when I say I can't pick the high or low of anything, how can you? I can see the rotation, but I can't tell what it's going to do. Just not my thing. So we have to see what happens right here. The buyers, there's 184 sell stops, and there's Iceberg absorbing those sellers. And it's right at the micro high volume structure. Anyway, I don't have anything to do here. I'm just a tourist. I'll sit here and I'll look at this and I'll narrate it. This is what I do. I narrate it because I know what might happen. I can even determine where it might happen, but I can't tell you what will happen. Neither can a casino tell you what's going to happen when they deal the cards. So that's the business. Might not be the business you want to be in, but that is the business. So if you've ever gone to a casino, you understand that they only play games with an edge. They only control how they play the game. They don't control cards coming out of the deck or how gamblers play the cards. So they have no control over there. So we don't have any control over the other participants. We don't control how they play their game. We control nothing other than how we play our game. And that's where statistical probabilities come in. The casinos know over a large sample size in a random environment that they only control how they play the game. So their edge is extracted by playing the game exactly the same way. And they accept they're going to pay the gamblers, but somehow they pay the gamblers and they also can give you the cocktails and the ticket to the buffet. So I think they're doing okay. Comp your room, fly you in if you're a roller, you see. So they only play games with an edge. If you are buying this, do you have an edge here? If you go, I don't know if this trade's, I mean, by the way, we don't know what the trade's going to do. Do you have an edge? Do you know what you will do? The thing about trading is it's not making it up as you go. It's knowing what you'll do. You know exactly what you will do. You don't know what the market will do. The dealer in the casino knows exactly what they will do. They don't know they don't know what the outcome is going to be. So if they can't know, how can we know? So we can't solve for that. We have to solve for not knowing. And part of solving for not knowing is anticipating the location of the trades and only interacting when you have a statistical edge. The rest of the time, leave the gambling to somebody else. 90% of retail traders fail because they're gamblers. And I'm sure if they knew they had a choice as far as to keep gambling or to only interact when they have an edge that favors them, they might choose differently. If you're gambling, in spite of having random winning trades, but you're not moving the ball forward, are you a gambler or do you want to potentially build the business with sustainability? Choice is yours. Trader Lab's available to you. Use the link in the bottom of YouTube if you want to visit. There's no cost. Please leave a like on the way out. Also, if you're in YouTube, encourages me to create some additional content and keep doing this. There is no cost for Trader Lab. Thanks again, guys. Please give a like. Be sure to watch the streams. You can get a lot from them. Watch them more than once if you need to. Isolate specific things of interest. Screenshot them. Come to Trader Lab and ask about it. Take care, everybody. Have a great day. Trade safe. Look forward to seeing you tomorrow.